Basically wasted years of my 20s with thousands of hours of being confused and also thousands of dollars that I didn't need to waste had I have known the information in the foundation that I'm going to share with you in this video. So I'm going to start with foundational information. So a simple way of looking at trading to start with the basics. Then I'm going to show you the websites and the tools that you're going to need to follow along with this process. I'm going to talk about trading psychology, which is probably the most important thing that will either make or break your trading. A simple way to understand trading math that can be really confusing in the beginning, as well as a complete crash course of the most important things that I know about technical analysis. Then I'm going to show you how to build and test your own strategies. Then at the end, I'm going to show you how we can take everything that we've learned. We're going to apply them into a real life scenario to show you working them in real time. So by the time you make it through this entire video, you're going to have a clear-cut, simplified path to starting your trading career properly. Okay, so let's first start and set the foundation by understanding how trading works and how we should be looking at the market. Okay, there's a lot of technical elements that can be really confusing, and if you learn bits and pieces of it, it can throw you off the rails. This is a very simple way to understand how the market works and how the mechanics of it work. So over here, I have a chart open, but right now we're not going to worry about anything other than how and why the market is moving. Okay, so whenever we're looking at a chart, which in this case is this blue line, we're looking at increases and decreases. So all the chart is showing us is a visual representation of mass human psychology, meaning that there are buyers and there are sellers. Now, this is done with algorithms, this is done by physical trading, this is done in all sorts of different ways. So it's not as simple as people just clicking buy and sell, right? But the general premise is the market is adjusting to fill imbalances which are caused by supply and demand. So how this works is like this. Let's take right here, for example. In this part of the chart, when price is moving up, that means that there is demand from buyers and supply from sellers. If the demand outweighs the supply, the market is going to move up until there's another point where supply starts to outweigh the demand, and the market will correct until once again there's more demand than supply, and that will sort of bounce back and forth, which is going to produce something called volatility. Now, volatility is basically anytime there are drastic big moves in the market. And these are going to open up trading opportunities for us later. So simply put, as traders, our job is to find areas of the market where we can enter at a certain price, have the price increase to another price, then however many of these we bought times the increase is going to give us our profit. So if we bought 100 of these units at $200 and it increases to 205, that's $5 in profit per 100, which is going to give us $500 in profit. But let's take another layer deeper to start understanding where these intraday opportunities come from. So let's take a 1 year starting point as an example. Over the course of a year, this is the general stock market. We can see anywhere from 10, 15, 20, even 30% gains in an individual year. That means that if we were to buy $100 worth of SPX at this point and price increases, we now have $130, and technically our total risk implication is if everything were to melt down and technically go to zero, we're technically risking $100. This is the concept of investing. Now, you're only going to get, say, 10, 20, 30% in a good year, but usually right around 10%. So effectively, we'd have to wait an entire year to get between 10 and 30%, which is good if you're dealing with a lot of money. But if you're trying to scale a small amount and make an income off of it, you need to have a tremendous amount of capital. Otherwise, you have to find other opportunities in the market. Now, what happens if we zoom into just this one small area, where now instead of looking at an entire year's worth of movement, we're now looking at individual days worth of movement. So we'll take today, for example. Now, even in a single day, we had this amount of movement to the upside and this amount of movement on the downside. So instead of waiting an entire year, if we were able to enter here and sell somewhere up here and now still risking $100, just with this single move, we would make $341. And this would happen in the matter of 1 hour. We can have multiple of these opportunities in a single day, which allows us to go from making, say, $30 in a year to be able to take that same amount of risk and be able to make $600, $700, $800 in a single day, risking $100. Okay, but as the numbers get smaller and we're dealing on a zoomed in 1 day view, the math and the strategy behind this starts to get a lot more complicated, and it gets more important to know how to do this to properly calculate your risk. Not only that, but we need to know where we're buying and selling and the likelihood of that happening. So just as an example, if you're new, you're especially not going to understand exactly how this works, but this is a trade that took about 2 hours where I was basically able to pick an area where I expected for the price to significantly drop, enter in, actually be able to make profit from the market going down, which even a lot of people don't understand that you can do, especially good when markets are moving down to know how to do this skill. And you can see I followed this down for hours, going up $2,400, $2,600, $3,000, nearly $4,000 before taking the trade off for full profit. And that was only risking $500 that I was able to make over $3,000 in about 2 hours. Okay, this isn't to brag, it's just to show you that if we can use this ideology and framework on a daily basis, these are the opportunities that if you lock in and take it seriously, that that are going to be on the table for yourself. But before that, let's talk about all the tools in websites that you're going to need to set this up for yourself and start as a beginner. Okay, so realistically, you're going to need three major things. First thing is going to be TradingView, which is where we're going to be doing all of our charting and analysis. That's going to be your home base. The second thing that you're going to need is some sort of way to actually place trades. Now, you're going to need some experience before actually doing this. Okay, but considering I trade cryptocurrency, I like to use Blowfin or Bybit. I'll show you how specifically to use those a little bit later into the video. Okay, and if you're looking to trade stocks, a lot of our traders are using topstep.com. The third thing you're going to need is a trade journal, which I'm going to provide to you, but more on that later. Once you make your way into TradingView, you're going to have a screen that looks something like this. What you're going to want to do is click on products here and click on super chart. That's going to bring you to a plain chart like this. Now, when it comes to style and really setting this fully up, I have an amazing video you can go through that I'll bookmark at the end of this video, so you can watch that after and get fully set up. What I like to do when I'm trading is take my trading view, put it on one side of my screen, and I'll take my trading platform where I can input my orders, and I'll put it on the other side. So now I want to share with you some fundamental trading information so you fully understand the approach you take with trading. So anytime you're placing a trade, you're basically selecting what's called a pair. Now, a pair is going to be any sort of asset that you're either buying or selling against the value of the US dollar. Okay, so this is Solana versus the US dollar, which the US dollar is going to maintain a pretty consistent value, and Solana will either go up or down against that value, which is going to create price movement. The way we manage our pairs is using something called watch list, which is over here on TradingView. Okay, so for example, if you're creating a new watch list, we can click this plus button here. And if we want to go to cryptocurrencies, we can click on Bitcoin, XRP, Sol. We can start selecting different cryptocurrency pairs to have in a list here, which will allow us to flip between and to have access to viewing how these individual charts are moving. So